But most of the questions that I get when I travel around Europe are for people who are scared of higher valuations. They're scared of innovation. They're scared of the risks. So they'll never invest. They wouldn't invest at Nvidia at half the price or a third of the price because at every stage it seemed expensive.
Die Geldmeisterin. Der Finanzpodcast mit Julia Kistner. Und mit Raj Shant, Managing Director des Investmentberaters Jennison Associates, der argumentiert, warum hochbewertete Technologieführer für Langfristinvestoren immer noch einen Einstieg wert sein können. Die Erwartungen waren hoch, die Ergebnisse noch höher. Chiphersteller Nvidia war wohl die positive Bilanzsaison-Überraschung dieses Jahres. Mit einem Quartalsumsatz von 26 Milliarden US-Dollar, das sind 226% mehr als im Vergleichsquartal des Vorjahres. Das Ganze ist natürlich getrieben vom Datencenter-Hype. Nvidia ist für generative künstliche Intelligenz einfach der führende Chiphersteller. Nvidia hat diese Woche am 22. Mai auch einen Aktiensplit von 1:10 angekündigt, der am 7. Juni durchgeführt wird. Ein Nothing Burger, wie man es in den USA so schön nennt. Denn ein Aktiensplit macht die Aktie natürlich nur optisch günstiger. Statt einer Aktie bekommt man dann eben 10 neue, die zusammen ident viel wert sind. Aktiensplits sollen auch Kleinaktionäre den Kauf von Aktien ermöglichen. Diese Einstiegshilfe ist aber nicht mehr so unbedingt notwendig, da man bei den meisten Brokern ja auch Teilaktien erwerben kann. Was bei Teilaktien das Problem sein kann, dazu einmal eine gesonderte Podcast-Folge. Ein Aktiensplit macht beim drittwertvollsten Unternehmen der Welt mit einer Marktkapitalisierung von inzwischen 2,62 Billionen US-Dollar durchaus Sinn, bei dem 1 Billion US-Dollar Börsenwert allein schon seit Jahresbeginn hinzugekommen ist. Nvidia ist damit mehr als sämtliche deutsche DAX-Werte gemeinsam wert und mehr wert auch als Amazon und Tesla zusammen. Was ein Aktiensplit Nvidia schon bringen kann, ist die Aufnahme in den US-Leitindex Dow Jones. Die Frage, wie wichtig dies für die Aktien ist schon zu stellen, zumal die meisten US-ETFs auf den Index S&P 500 setzen, in dem Nvidia ja schon enthalten ist, und nicht auf den Dow Jones. Schön für Nvidia-Aktionäre ist in jedem Fall, dass der Chiphersteller auch eine Erhöhung der Dividende von 4 auf 10 Cent angekündigt hat je Aktie. Nvidia sei ein gutes Beispiel jedenfalls, wie die Europäer große Chancen am Kapitalmarkt auslassen, weil sie beim Veranlagen einfach zu ängstlich sind und bei so hohen Bewertungen nicht mehr einsteigen, auch wenn das Wachstum von Umsatz, Gewinn und Cashflow dieses rechtfertigen könnten und Nvidia noch länger bei Chips für generative künstliche Intelligenz wohl die Nase vorn haben dürfte. By the way, ich bin ein typischer Europäer, weil ich meine Nvidia-Anteile nach 30% Kurs plus noch vor dem großen Höhenflug verkauft habe und damit gegen die Regel Nummer 1 verstoßen habe, die gerade für Langfristanleger gilt: Gewinne laufen lassen. Europäer würden in Nvidia nicht einmal zum halben oder Viertelpreis investieren, ist mein dieswöchiger Podcast-Gast Raj Shant überzeugt. Dazu gleich mehr, aber zuvor noch der Insider-Deal der Woche. Ja, so leid es mir tut, der Skandal der Woche ist wieder einmal rot-weiß-roten Ursprungs. Der Österreicher Werner Landthaler, der 15 Jahre lang die Biotech-Schmiede Evotech mit 2200 Mitarbeitern erfolgreich leitete und groß machte, trat im Jänner dieses Jahres überraschend zurück. Sein Vertrag wäre eigentlich noch bis März 2026 gegangen. Laut Manager-Magazin galt er mit mehr als 10 Millionen Euro Jahresgage als einer der bestbezahlten CEOs CEOs deutscher Unternehmen. Der Chef des MDAX-Konzerns hat, so wird gemutmaßt, durch intransparenten Insiderhandel mit eigenen Evotec-Aktien sein fürstliches Salär noch aufgefettet. Die deutsche Aufsichtsbehörde BaFin ermittelt längst, jetzt soll sich auch die österreichische Finanzmarktaufsicht FMA für Werner Lanthaler interessieren, heißt es. Konkret soll Werner Lanthaler sich unerlaubten Insiderwissens bei Transaktionen zwischen 2021 und 2023 bedient haben und der Finanzmarktaufsicht Transaktionen zu spät mitgeteilt haben, die er im Dezember 23 und Jänner 24 dann nachgemeldet hatte. Der Handel mit eigenen Aktien, der ja eigentlich auch erlaubt ist, wenn er korrekt gemeldet wird, soll dem Ex-Evotec-CEO einen Gewinn von 50% oder 2,2 Millionen Euro beschert haben. Damit kann man wahrscheinlich auch leicht eine Geldstrafe von 500.000 Euro bei Pflichtverletzung verkraften. Es gilt selbstverständlich die Unschuldsvermutung. Tief gesunken. Nach der Bilanzveröffentlichung nicht so angesagt war diese Woche der Pharmariese Bristol Myers. Um Kosten zu sparen, will Bristol Myers heuer 2.200 der rund 34.100 Jobs weltweit streichen. Die Bristol Myers Aktie hat seit Jahresbeginn knapp 21% verloren, in den letzten 12 Monaten über 36,4% und liegt auch noch knapp 4% unter ihrem Wert vor 5 Jahren. Eigentlich ungewöhnlich für einen so breit aufgestellten, hervorragenden Pharmariese, der mit Produkten im Bereich Onkologie, Virologie, Immunologie erfolgreich ist und auch Präparate zur Behandlung weit verbreiteter Erkrankungen wie Herzinsuffizienz, Schlaganfall oder Thrombose herstellt. Leider laufen bei ihm viele Patente aus, die typische Gefahr bei Pharmaaktien. Die Gewinne von Bristol Myers sind seit Jahren stabil, nur das Gewinnwachstum ist in den letzten 10 Jahren um knapp 6% zurückgegangen. Für das heurige Geschäftsjahr rechnen Analysten sogar mit einem Rückgang des Gewinnes um satte 92,5%. Daher würde ich mir die Aktien persönlich trotz des Kursverfalls momentan noch nicht ins Portfolio legen, bevor es nicht wieder bessere Gewinnwachstumsperspektiven gibt. Wahrscheinlich fände auch mein Podcast-Gast Raj Shant die Bristol Myers Aktie als Langfristinvestment nicht besonders attraktiv. Er hält stets nach Innovationen Ausschau, die für ausreichend Gewinnwachstum sorgen können. Die Europäer sind viel zu ängstlich beim Geldanlegen. The fittest win, that's life, bringt es mein Podcast-Gast Raj Shant gleich auf den Punkt. Ihn beunruhigt daher auch nicht, dass nur eine Handvoll Unternehmen den Kurs der großen Indizes hochhalten. Bevor man sich Sorgen um die aufkommende Konkurrenz für diese Highflyers machen sollte, sollte man sich das Wachstum der Erträge, Cashflows und Umsätze dieser Top-Performer anschauen. Wenn das in Ordnung ist, rechtfertigt dies auch den hohen Preis, meint Shant. Zudem würden die Bewertungen immer noch den langfristigen Durchschnitt entsprechen, auch wenn sie längst natürlich nicht mehr so niedrig wie noch 2023 sind. Ich würde an dieser Stelle sagen, lassen wir Raj Shant doch am besten selbst zu Wort kommen und erzählen, welche Aktien er derzeit bevorzugt. Viel Hörvergnügen wünscht Julia Kistner.
Thank you for being guest at Geldmeisterin, Mr. Chan. We already talked to each other 2 years ago, and we were also talking about the huge future of tech shares, and you were right. Would you please introduce yourself for the bigger audience I have today?
Thank you very much for having me. So, my name is Raj Shant, and I'm a managing director for Jennison Associates, which is a PGIM company. I'm based in London, although Jennison, most of our investors sit in New York. And I've been a professional investor for over 30 years now. And delighted to meet you again. Delighted to see you again.
And why do you think in these 2 past years, why did the tech sector perform that great? Is it just the AI topic or is it something else?
I think it's a few things. So for all those listeners, the new listeners that you've acquired in the last 2 years, I'd highly recommend they would go back to your podcast from 2 years ago when we discussed what was going on back in 2022. And I think really to understand what's happening, as with anything, you need to look backwards before you can look forwards. And the context I would set is this, that during the time of COVID in 2020, a lot of high growth companies, a lot of tech companies, the valuations shot up because we were all locked into our homes. Everything to do with digital technology, remote working, shot up very strongly. We never knew when we would be able to meet like this again. So they did extremely well. And the valuations went up to, if you compare growth stocks to the broader market, and over the long sweep of history, the valuations in 2020 went up to very high levels. And so in 21, we gave some of that back. And in 2022, when inflation shot up, interest rates and interest rate expectations shot up, we gave up a lot of valuation. So everything would gain and more. So a lot of this was to do with the macroeconomics, what was going on in the world, not to do with the underlying earnings, the underlying growth of those companies. So when we spoke at this time a couple of years ago, the companies themselves were reporting great sales growth, great profits growth. Their share prices were falling very, very strongly. So by the end of 2022, the valuations of the higher growth companies were a long way below where they normally are relative to the rest of the market. Now, that makes perfect sense because interest rates were going from 0 or even negative to 2, 3, 4%. That's a huge change in the environment. But I felt then, and we felt then, that, and we were right, as you said in your kind introduction, that had gone very far. And in fact, if you look at the top of the market for those kind of stocks to the bottom, which is the third quarter of 2022, the decline was bigger than you had when the TMT bubble was bursting. But the reason for our confidence was, this is no bubble. A bubble is when there's no earnings, there's no cash flow, nothing underpinning it. The companies that are leading the innovation and technology wave now are making huge amounts of revenues, huge amounts of profits and cash flow. Really, it's almost embarrassing. They're trying to hide that from the regulators. They're making so much.
Yeah. So if you look at the Magnificent Seven, or in Europe, the granolas, and so on, but granolas are not just tech companies.
Yes.
But let's concentrate on the Magnificent Seven. So there's no danger of a bubble because they all make the earnings, and so therefore the valuations are okay.
Yes. So I would make several points. And it's a popular question, so I'm glad you asked it. So the first point I'd make is that if you just look back at the last 3 years, how many acronyms have we had? Well, let's say the last 4 years. You've had MAGA, you've had MAG, you've had FANGs, you've had BATS. So whatever the leadership is, people seem to like to make up rubbish acronyms, and they change it every year. So now Tesla's been dropped from it, and so it's insane. It's a bit like looking at, we're in Austria, so we can talk about Formula One racing, and saying, well, Ferrari are winning. Oh, is that wrong because one company wins it, or Red Bull are winning? So is that wrong? Mercedes were winning before. Is that wrong? It's crazy. The fittest win. That's life. So whenever you look at any progress, genuine progress in the market, there's always leadership. Without leadership, there's no progress. There's no returns. So it's not unusual that a small number of companies lead the progress.
So it doesn't make sense to buy the one in the second row.
Well, second row maybe, but I think what a lot of, and the whole idea behind granolas, literally the only one of those companies that makes our global top 10 holdings is Novo Nordisk. You take several of those granolas and you take away, look at how their revenues grow. You take away inflation around the world, and you'll see there's hardly any growth in their revenues after inflation. All they're doing is putting up prices. They're not innovating. Novo Nordisk is different, and we can come back to that. Even in the US, there are other growth companies. So Novo Nordisk's close competitor is Eli Lilly, another top 10 holding for us. These are companies that were already growing strongly because they were the leaders in diabetes. And now they found with these special new category of drugs, GLP-1 inhibitors, in case your listeners are interested in the science. And they found that helps diabetics, but it also helps people who are overweight. And interestingly, there's a lot of research being done that the scientific research will be coming through the next couple of years. Because when people are very obese, it creates problems for their kidneys, their lungs, their hearts, lots of other problems. So you could see much broader usage for those drugs. And the question I get back to that is, well, they're very expensive.
Yeah.
Firstly, as time passes, they will get cheaper. Secondly, the race is on to introduce an oral drug, which will be much cheaper and much easier to use rather than injections at the moment. And thirdly, do you know how much it costs to treat somebody with kidney failure or with lung failure? It's huge. There's still a massive saving for governments, for insurance companies, for hospitals to avoid getting to that problem where the kidneys fail altogether.
So there's a lot of space for competitors still.
Maybe, but there's a lot of space for growth for all the leaders already. And at the moment, the world cannot make enough of these obesity drugs to satisfy demand. So before one worries about the competition, why not think about the profits first, the growth first? I think it's interesting that a lot of the great growth innovators are coming from the US. In Europe,
why is it, do you think?
I think it is the mindset in Europe to always worry. This is very successful. This is bound to have competition. The share price has gone up too much. Nvidia, the chip company that makes graphic processing units, GPUs, that are basically the foundation of generative AI. We've been holders in our global equity strategy, the PGIM Jennison Global Equity Opportunities, for a while now. And the questions in Europe are all, hasn't it gone up a lot? Hasn't the share price gone up a lot? Hasn't it gone up too much? Don't you think it will come back? The fact that it's cheaper today than it was last spring when they had the biggest upward profit warning in the history of stock markets ever, anywhere. No European investor seems to recognize that. So I think there is a mindset which worries that growth and innovation is risky, and the higher valuations that nearly always come with higher growth and higher innovation is risky. There must be competition because they're making such good money, and therefore it's bound to all come back. So that leads people to invest in, let's say, the rest of the granolas or second or third or even fourth tier companies. But if you can tell me, just one more, if you can show me a big bank in Europe that's added to your wealth if you'd held the shares for 10 years or more, I will buy you dinner. Because you can't. A big insurance company. I'm sorry, it's not possible. You know, a lot of the traditional industries that are big in the stock markets in Europe, they would have made you poorer after inflation if you'd held their shares for the long run.
So you would say not the price or the evaluation it matters the growth and the revenues.
I would say that if you want to invest to get richer in the long term, you might as well buy government bonds if you want flat coupons, right? Yeah. So firstly, you've got to start with growth, whether it's revenues or cash flows or profits. All of those go together usually in the majority of cases. But you do need to do your fundamental research. Secondly, valuation does matter. And, that's why I was so confident about these growth stocks in 2022, because the valuation was a long way below where it had historically been. Where are we today on the valuation? Well, actually, it's exactly in line with the long-term 20-year, 25, 30-year average relative to the broader market for growth stocks. So what does that tell you? That tells you that 2023, we recovered from a very depressed valuation. We're now around average. So there is no reason a new investor putting new money in today should expect valuations to go up or down. They probably will because markets go over or under. But at the moment, you're around the average. So your returns should be driven by the fundamentals. And the fundamentals are how much of the revenue is growing, how much of the profit's growing, how much of the cash flow is growing, quarter after quarter, year after year. That's the fundamentals. NVIDIA, the expectations for profits have grown more than the share price. But how many investors in Europe realize that?
And where do you see right now the opportunities?
In tech, obviously generative AI is the big growth area. And what we are doing, let me come back to that because that's the biggest one. I think luxury was something we still liked. So during that time of lockdowns and less international travel, some of those valuations had come back and would increase our weightings. And luxury goods companies like Louis Vuitton or Hermes, they have over 100 years of history of growing strongly through war, through epidemics, through pandemics, because they nurture and nourish their brands for the long term. So we think that's still strong today. We've taken some profits because the valuations went up a lot last year, but they're still growing very nicely, the good ones, the well-run ones. Other areas of innovation are things like the obesity drugs, the diabetes drugs that are being used now for obesity. Literally, the world hasn't got enough manufacturing capacity to make as much as the demand globally. So if you wanted to go into the manufacturing, you can wait in line. You might be waiting 2 years to get capacity at a manufacturing site. Actually, more like 5 years. So it's a really interesting space because they're investing a lot, but they still can't invest enough to grow capacity. Similar theme for AI. So generative AI, to be specific, has been made possible through these incredibly powerful GPU, graphic processing units, that NVIDIA is the leader in. The whole supply chain cannot make enough. So there are other companies, and we do like one or two competitors that are trying to get into that space. You might be correct there. That's not one of our top 10 holdings, so I can't talk about that. But you're not far off the mark. There are other companies whose chips, we would say, through our fundamental research, are probably not as good as NVIDIA's, but it doesn't matter because they will still benefit. Because at the moment, what we're doing is we're building these large language models. We're training these models. That's great. But the next wave of development will be using those models for, say, a media company or a financial services company or a medical company or a law company. For that, you don't need to write a Shakespeare sonnet. You don't need to write a haiku, right? So you don't need the same powerful chips. You may only need a medium language model, a smaller subset of that larger model. So you don't necessarily need the very highest end chips for that. And then actually when you're using that intelligence in a very specific function that repeats over and over, you might only need an application-specific chip. They're called ASICs, so application-specific instruction chips. And they are, if you imagine for autonomous driving, they're cheaper and simpler still. Autonomous driving. You could have a simple rule. You're driving along Vienna Street. A ball rolls out from between two cars in front of the car. There is a good chance a child may follow that ball within 1 or 2 seconds. So slow down now. You see the ball, slow down now. You don't need a large language chat GPT-4 model for that, right? You just need some basic intelligence, some basic circuits and algorithms on that. So we expect the whole infrastructure layer to benefit. And so chip manufacturing, chip design companies. We also believe in the cybersecurity companies. And then increasingly also some of the database companies. So at the moment, these large language models are being trained on all the information on the internet. Some of it's amazing, very good. Some of it's terrible. Some of it's really quite bad. So, but, you know, if you're training it for a media company or a financial services company or a healthcare company or a law company, you don't want that general data. You don't need the sonnet and the haiku. You want to train it on purer, cleaner data for a specific set of functions.
So there will be more specific companies?
Yes, but I don't think they'll necessarily be companies. They'll be applications.
Applications, okay.
So at the moment, we're just at the beginning, and the proof of concept is happening now that generative AI is real. It can be very powerful. It can do a lot of things.
Generative AI is now one of the high performer of the next years. Who are the losers of this development?
Well, it's all those other companies, the second, third, fourth tier companies. So there was some, and these are not companies we invest in. So I'm just pointing out something that's factually available in the newspapers. There was an announcement last week by a Swedish on buy now, pay later company who said that some 60% of their client service is now being done through generative AI bots, models. And what they're doing is they're using them alongside human beings, and they're also using them to answer online questions. These are text-to-text questions rather than voice. And they're getting an improvement in satisfaction ratings from the users. Their valuation went up by a few hundred million on that announcement because it means they could potentially do more with lower costs. But there was another company, a much, much larger company, whose entire business is call centers, whose valuation fell by about 3 to 4 times as much. So value creation and value destruction. So if you want to invest in those cheaper companies that are less innovative, go ahead. But they'll probably be on the wrong side of the big changes going on in the world. And so you better have a very large fortune, because at the end of the next 3 to 5 years, you're probably going to end up with a much smaller fortune because these companies are not ready for it. And their businesses are legacy businesses, effectively.
And AI's big players are all in the United States. So do you think there could be also some interesting companies in Europe?
Firstly, again, just talking facts, because these companies are not held in our portfolio. It's actually a private company, but I won't name it. But there's a very successful French AI company, which Microsoft has just taken an undisclosed stake in, and they're also giving them privileged access to their cloud services on Azure, like they did with OpenAI before. So Microsoft is one of our top 10 holdings. Now, why aren't there a lot more successful companies in cloud infrastructure, in cloud-enabled data centers, in generative AI? So there are occasional examples of success. So there's a very big Dutch company, which is the world leader in the high-end equipment for manufacturing. You could say that. It's not in my top 10, so I won't. But why isn't Europe investing more into these? I think it goes back to the beginning of this conversation. Europe is full of risk-averse people. Europe is scared of taking a risk. If you can work for the civil service, why spend years of your life working for no money in the hope that your technology works out? And around Europe, I get the question of what can European governments do to encourage more innovation, more growth, more like Silicon Valley or the NASDAQ? And that's even the wrong question. what can they do less of, not what can they do more of, is where you should start, right? So if you work 7 days a week for no money for 2-3 years, and then you make $1 billion at the end of it, the American system kind of goes, well done. If you make like Musk tens of billions of dollars, then even they worry. But that's not the culture. That's not the approach. And even that politicians and regulators are having consultations with investors saying, what should we be doing more of? No, do less. There is no reason why Austrian scientists and mathematicians are not as good as anyone else, or in France or in Germany or the UK. But you need to create a broader environment where people actually look at these things as a positive. But most of the questions that I get when I travel around Europe are for people who are scared of higher valuations. They're scared of innovation. They're scared of the risks. So they'll never invest. They wouldn't invest at Nvidia at half the price or a third of the price because at every stage it seemed expensive.
At the end, could you tell me a little bit about your 10 top holdings?
Sure. So, our biggest holdings would tend to be not exactly equally, but almost equally. Big tech, but not all of the Magnificent Seven. We do a lot of fundamental research. We hold, I think, four of the Magnificent Seven. But you can see with NVIDIA that we think that they're making the hardware and the software for generative AI. They have a lot of software revenues now. Microsoft, who are arguably first movers in applying generative AI. That's going to be the next evolution over the next few years. And then we've got a couple of other tech companies. And then we have the two leaders in GLP-1 inhibitors in the world. There's a shortage of supply there, just like there is on generative AI. So Novo Nordisk and Eli Lilly. And then we have several luxury goods companies in our top 10, whether it's Louis Vuitton, LVMH, or it's Hermes, or even something that some people would think of as a car company, but it's really a luxury goods company, Ferrari. Because if you covered up the name, you look at the profit margins and the return on capital, it looks like a luxury goods company. It looks nothing like the car companies.
And is there any sector you wouldn't invest where there's no growth, like, I guess, banks?
So, yes, there are lots of sectors where it's very hard to innovate, very hard for them to really create value, and therefore very hard for you to make any money as an investor over the long term. Obviously, if you're trading, you buy it in the right month and you sell it a few months later, you might make a lot of money. So, the easy way to describe this is there's been a very long-term study by an academic called Bessembinder from the University of Arizona. And if your listeners Google that, they can see he did very long-term studies over 100 years of how many companies in the US actually beat the return on treasury bills. Over 100 years, it was less than 4% of all the companies.
Really?
Yeah. And then people say, oh, that's just because it was America. And at the beginning of that period, it was a second tier country. At the end of that period, it was the world leader. It wouldn't look the same elsewhere. So he did it in the rest of the world, ex the United States. It was even fewer companies. About 3.5% of all the companies created more than 100% of all the value creation.
And what does these companies have to have?
Innovation. Doing something that people really need and will pay for that nobody else is doing and nobody else can do. And that changes all the time. And I think, going back to your earlier question, the vast majority of companies, over 90% of companies in Europe, are not going to make you a better return than government bonds after inflation. There are a small number of companies in the world today who are genuinely innovating. And a lot of investors in Europe will always be too scared to buy their shares because they will not be cheap. They're doing something genuinely different that people are genuinely willing and able to pay for. that other people are not doing. So I could rattle off all sorts of sectors, all sorts of companies. But I would say to your listeners, if you think about all the companies and all the products and services you come into touch with every day of your life, how many of them are doing something different to what they did 5, 10, 15, 20 years ago? Very few.
And you shouldn't wait until these companies get cheaper again.
By the time they're cheap, it means that their products have become universal, the competition has come in, and it's usually you probably long after the time to sell.
Thank you, Mr. Chant. It was really a pleasure again.
Thank you so much for having me.
Alles Gesagte ist nur die persönliche Meinung von Julia Kistner und daher keine Anlageempfehlung und keine Rechts- und Steuerberatung. Für Verluste, die aufgrund von getroffenen Aussagen entstehen, übernimmt die Autorin Julia Kistner keine Haftung.